For more on Google, Scott Kessler is on the phone with us. He is head of tech equity research at Standard & Poor's. Scott, good morning to you. So for many people, a disappointment from Google. You cut your earnings estimates. You cut your price target on the stock, yet you reiterated your strong buy rating. Why?
Well, Eric, thanks a lot for having me this morning. This is really a simple situation here. Google has been identifying numerous opportunities they want to pursue, and they're spending aggressively accordingly. Companies have more cash on their balance sheets than some say in history. Google is no exception. We think that it's appropriate that the company take its substantial balance sheet and cash flows and commit them to growth enterprises. So while it doesn't feel so great the day after the company reported a decline in operating margins of a couple hundred basis points, the reality is that these investments should pay off in the future, and that's one of the reasons why we still like the stock.
Okay, but you then must be certain that Larry Page is plowing that cash into the right places and not wasting it. Google's had all kinds of sort of distracting side projects. How can you be certain the money's going to the right place?
We can't be certain about that, Eric, and that's a very important question to keep in mind. But we do think that they are very much focused on a number of the right areas. They were highlighted in the context of the call and the conversation yesterday. You guys had talked about everything from display advertising to YouTube to mobile. All of those are tremendous growth opportunities. The company is focusing very, very much on pouring capital, resources, and attention into those particular categories. And frankly, they've started to see the fruits of those investments. Just look at the revenue growth. This is a very large company, and even though they've done a number of acquisitions, they've generally been very small. Yeah. This is largely organic growth, 27%. I think that is very substantial and could frankly accelerate as we see more investment.
Scott, I don't have much time left, but I want to ask you a question about Larry Page. We just mentioned he was on the call very briefly. He didn't have much to say. He talked a bit about the management change, but mostly he was talking about how excited he is. This isn't a tryout for the cheerleading squad. Everybody wanted to hear a little more from Larry Page. What does it say to you that he doesn't seem to get that?
Well, look, I don't think people think that Larry Page is going to come in and suddenly become a person that, frankly, he has not been over the last decade. He is a visionary. He is a great product person. He's not a particularly charismatic person-to-person extrovert who's going to be able to get people excited on a call like this. He understands his strengths, and I think that's very important as he leads the company going forward.
Scott, thanks for joining us. Scott Kessler, head of tech equity research at Standard & Poor's. He reiterated his strong buy on Google.